Are the 9 weekly paying dividend ETFs by YieldMax worth holding? I put $100 into each of them near launch, and I've been tracking their progress, their distributions, and their pesky NAV erosion. Today, we're going to cover some big pieces of news, specifically on ULTY, as it hit a new milestone with AUM. Lots of good data in here, and I hope you guys do enjoy. If you're interested in weekly dividends, in monthly dividends, you are in the right place. Don't forget to like the video and to subscribe so you never miss out on all the free information I'm giving away on which income ETFs are making investors the most money. Let's roll that intro. We did see quite a sell-off this week already. It's not been terrible. We saw some rocky waters a couple of days ago, and now it seems to be another sell day, but I am happy with the returns I've received from CHPY. This is the YieldMax Semiconductor Portfolio Option Income ETF, and in my opinion, this one is very underrated. Now, we have an AUM of 32 million. AUM stands for Assets Under Management. The dividend yield is 12.56% trailing 12 months, meaning it's not accurate because it's spanning over a full 52 weeks. Since we haven't paid out 52 times, it's not going to be completely accurate. It is skewed. So the yield is probably roughly, I would assume, 50 to 60% on CHPY, and I'm very impressed with it. If you guys don't know who I am, my name's Spencer, and I talk all about income investing, and I'm really happy with what we've seen in the weekly dividend ETF space. There's a lot of new ones. There's some old ones that aren't doing as well. There's some old ones that are doing really well, but all in all, it's been a really fun adventure in the weekly game. There's a lot of news and some things I want to tell you guys about in this video, but we are going to cover each of the 9 YieldMax ETFs. We're going to look at, like I stated, the AUM, the dividend yield, the chart, and the dividend payout per share, the last couple. And what that does is it showcases if the yield is going up or going down based off of the last couple of payments. So I'm really excited to get into this video, and CHPY is a really solid one to start. We've seen it grow. It's just gone up in price quite nicely. On launch, it was still, let's zoom out a little bit, it was still trading around the $47 mark, maybe a little above that. Our buy is at $51.83. Currently, it's at $53.57. We have a nice profit on our distributions, and we also have a nice price return on just what we purchased the ETF with, that initial $100. CHPY is one of the only ones that has the initial amount invested higher now than it was at the time of purchase, which is, I think, very impressive. These are not growth ETFs. They're not meant to grow over time, but the dividends are meant for income, which I love to see. Last couple of distributions, we had 37 cents per share, 37 cents per share, 41.5 cents per share, and then 39 cents per share. It's a higher yielder. It is a little more expensive at $53, but there's some key things I like about CHPY, particularly the fact that it's in the semiconductor industry, and I am long on semiconductors. Very happy with this so far. At the end of the video, we are going to throw all of this into our dividend tracking spreadsheet. I had it created specifically for the channel to track my weekly and monthly dividends, and I'm really excited to show that to you guys. It's finally available for purchase at spencerinvest.com for those interested. If you're not interested, ignore that, and let's jump into our next ETF. GPTY is a very solid one. This is the AI and Tech Portfolio Option Income ETF. We've seen it fall. We've seen it rise back up, which I like to see. I don't love seeing them fall, of course, but I think it's really impressive when an income ETF is able to recoup the losses that we saw during some crazy down markets. And that's what GPTY did. Almost all the way back to its initial price of $50. It went all the way back up to $48, and then is starting to trail off again now as we see the market turn a little bit more red. Has more AUM at 46.74 million, a little bit bigger than CHPY, and a little older as well. Dividend yield of 17%, not accurate because we've only been paid dividends since February, but we're getting a little closer. Last couple of payments, we saw 29.5 cents per share, 32 cents per share, 31.5 cents per share, and then 30 cents per share. And I'm really curious what you guys think, because to me, I think CHPY, GPTY, and our next one, LFGY, are some of the better new YieldMax options. And they don't seem to get a lot of the hype that some of the others do. But I am curious, are you guys buying these? Let me know, and let's jump into our next ETF. LFGY has been torched a little bit. We saw it fall from $41 all the way down to $36.76. Not great, and our buy was way up in the $50 range. We are probably back in the red on this one in the account, unfortunately. The AUM is 187.42 million, which has fallen off a little bit since the last time I checked. Dividend yield of about 40%. It's going to be closer to 80%. Started trading in January, so we're probably looking at 60% in a yield with LFGY, but the price has to stay stable for that to do really well. Now, we have seen crypto pull back, and this is the Crypto Industry and Tech Portfolio Option Income ETF. What a mouthful. But I do think those that love high yield and care less about their overall NAV loss, this is the one for them. It's going to yield higher, it's going to pay out more in distributions, but your initial value will likely sink over time unless we're in a really green market, which again, we have been in a very green market. So even though a lot of ours have pulled back from last week, they are still up primarily because this 3-month, 4 months we've been in has been pretty crazy when it comes to investing, which I'm happy about. I love it. Last couple of distributions, and we'll see how high they actually are. We had 48 cents, we had almost 49 cents, 47 cents, and then 43.5 cents. Not bad by any means, but I am curious. I want some feedback from you guys. We are all fans of the YieldMax weekly payers, or likely most of us. What do you think I should do? Should I reset this challenge at the end of 2025 and redo it for 2026? Should I keep doing it this exact same way? The reason I'm asking this is because I bought some of these at different times. We've had newer ones come out, and so sometimes they look really good and they've blown up recently, but it's only because of the really green market where they didn't go through the downtrend we saw at the beginning of 2025. So let me know what you guys think would be the best. I've also debated not putting $100 into each, but buying one share of each and tracking that progress. Let me know. I'm really curious what all you guys would like to see, as of course this channel is based on what everyone wants, right? We're in this together, and I like to make content that, of course, I want you guys to watch it and enjoy so that we can continually talk about my favorite hobby, investing. Let's jump into our next ETF. QDTY is one of the first of the zero DTE option strategy income ETFs by YieldMax. If you guys don't know, they have 3 on all 3 main indices, the NASDAQ, the S&P 500, and the Russell 2000. They are copying Roundhill. Copying, you can call it whatever you want to, it's the same thing. Roundhill has had them for quite a long time. Some of the oldest weekly payers are actually Roundhills, and I know that YieldMax is trying to get some money out of that as well. We can see with QDTY, it did fall off heavily. When I first saw this thing, I was not happy with it. It fell from $52 all the way down to $37, and now has climbed back up to 40, almost 45. So it also has recovered a little bit better, or is recovering a little bit better than a lot of the other ones, as it just holds up in price quite a bit better than like we saw with LFGY, for example. But these are not as popular. We have 12.4 million AUM, a dividend yield of 13.27%, and our last couple distributions are not going to really impress anybody. We had 19 cents, 19.5 cents, 17 cents, and then 27 cents. Holy smokes, never mind. I was wrong. 27 cents is amazing. That might be one of the largest ones we've ever received. Yeah, they used to be in the 20s and 30s, but very happy with that. I hope the other zero DTE ones can keep up. So let's jump into our next SDTY. All right, are the dividends holding up? The price did okay. Lower AUM again, 13.6 million, a dividend yield of 12.3%, trailing 12 months, and our couple of dividends. We had 15 cents, 16 cents, 14.5 cents, and 20 cents, almost 20.5. Very happy with that. I like when these ones jump up, and it is nice that with the implied volatility going up in the market, we are getting some juicier premiums and thus better payouts. Now, I do want this thing to go all the way back up to its initial price of around $50, but is it going to do that? Probably not. This one hasn't been as impressive to me as some of the other YieldMax ETFs, and people don't seem to like them as much, but it's not even the worst of the zero DTEs. Let's check out RDTY. The chart is very interesting. We have a lower AUM of 7.79 million and a dividend yield of 15.51%, trailing 12 months. This one's probably going to range in the 55% to 65% because it's on the Russell 2000. Higher implied volatility, there's smaller cap stocks and companies within the Russell, and that gives better premiums or payouts, but sometimes you sacrifice overall return for more in distributions. And what I mean by that is your initial investment drops. But let's see if this one had a great dividend as well. 33 cents per share, 39 cents per share. Wow. 35 cents per share, already doing really well, and 24 cents per share. So worse than the other two. And it was paying out higher than them, and now it's lower despite the market getting a little higher implied volatility. Not sure what's going on with these. I do like the idea of the zero DTE covered call strategies because what you're able to do is capitalize on a position, meaning if you're writing okay, it's hard to explain, but if you have a portfolio and you're focusing on, let's say, the Russell 2000, and you're doing zero DTE calls, that means they're expiring at the end of the day. So all of your money that's invested in the Russell you're putting that into the call for the day. When the call expires, either worthless or, however the options go that day, you get your shares back because they're immediately back in your possession. You still have them. And depending on if you lost money, that doesn't matter, because now what you're doing is you're holding them during aftermarket hours. And sometimes during aftermarket hours, you get some really solid returns. So I was really happy when they initially talked about these, specifically Roundhill, and now when YieldMax is doing it too. There's definitely a place for them, even if they are a little bit less popular. Now you know what we're going to talk about, everyone's favorite, ticker ULTY. All right, so much to cover with ULTY. First of all, we have an AUM of $3.04 billion. Last time I put this in the title as huge ULTY news when we hit 2 billion, and I got like 10 comments saying, it's clickbait, there's no big news. This is huge news. I don't think people fully grasp how insane this is. Not only is ULTY the first ETF weekly pair to hit 1 billion in AUM, some of these have been out for over a year, but it was the first to hit 2 billion and 3 billion. And now the only other one I know of that's even in the billions is YieldMax, and it's at like 1.02 billion, barely holding on, may even be under a billion again today. We'll see. But this is massive news. And why I'm saying this is because I think it will become the most popular YieldMax ETF. I don't see why not. I think MSTY has slowed down. The implied volatility has on MSTR. MSTR has grown. It's gotten a lot bigger in market cap, meaning the implied volatility is going to be a little bit lower. So I'm not saying Misty is dead by any means, but I think the time for ULTY is now. I just do. I will be putting out a full video breakdown on ULTY with everything that's been happening, how it held up in the market, and what my thoughts are with this ETF and how it would work. We have a lot to cover. I'm also probably going to throw in some how many shares invested. If you had, 100 shares, 1,000 shares, 10,000 shares, what you would get. We're going to put all that into one video, a longer video for you guys, which I'm really excited about. It's going to come out on Friday. If you want to mark your calendars, do it. If you want to turn on those notifications, do it. It's going to be a really good one. I'm excited to dive into ULTY, especially on Friday, just the happiest day, I think, of the week, because everyone ready for that weekend. Let's talk about it, though. Dividend yield, it's about 80 to 90%. Those are what the payments have been. And if you guys have no idea about ULTY and you're new to the weekly payers, here's what happened. This whole area of the chart dropped. It was awful. This thing was falling like mad. I purchased it the minute it shifted to weekly, which was March 10. And it literally still fell off even further. Went from $6.33 all the way down to $5.45. Nothing too crazy. And since then, we've seen it hold up quite nicely. Now, I know some of you guys might be freaked out because it fell from $6.45 down to almost $6 again. It's okay. I'm going to explain all of that in the video, what's going on, why this is happening, and I'm just really pumped for it. So I hope you guys are as well. Let's check out the last couple of distributions. For me, I like when ULTY stays above 10 cents. So let's see if we can hold up. Last couple, we had 10, we had over a little over 10, a little over 10 again, barely over 10, and still even more barely over 10 with 10.03 cents. Barely over 10, but still some pretty phenomenal news. Keeping that yield around 80 to 90%. Very happy with this, and people don't really understand why there's so much love for ULTY, because they don't understand the strategy change that took this thing from an absolute NAV erosion monster to a phenomenal income producing ETF. That's the cheapest one I think you can buy currently. There might be some of the monthly payers from YieldMax that are lower, but it's so cheap. You can get a bunch of shares and you can compound very, very quickly, which I'm really happy about. So I know a lot of you here are here for ULTY, but we need to check out some of the other originals from YieldMax, YMAG and YMAX. I was very surprised when I just put out a full video on every single weekly paying dividend ETF. There are 51 of them. I tracked all of their returns since inception, which some people wanted a different time frame. It's the easiest way to do it and keep it consistent. But overall, YMAG has outperformed YMAX. Not recently, but overall, which I think is very, very interesting. AUM, 378 million and a dividend yield of 49.63%. Pretty solid. If you want to watch that video, I'll link it at the end of this one. It's a long one, but it was really fun collecting all the data. Now, what's interesting with YMAG is it is still climbing up despite the market kind of being rocky with a lot of the other weekly payers. Don't know why that is, but I'm not going to complain at all. We had 15 cents, we had 20 cents, we had 7.5 cents because of the cycle. So if you guys don't know, YMAG just holds the 7 underlying for the MAG 7. YieldMax ETFs. That was a bad way of explaining it. So like Microsoft, it doesn't hold Microsoft, it holds MFSY. Same thing with Nvidia, with Tesla. It doesn't, it holds NVDY and TSLY. So it's only those 7 funds. So if it's going to pay out every single week, you only have 7. So you have two payouts for the first week, 2 for the second, 2 for the third, and 1 for the fourth. I don't know if that's the actual calendar. It might be the third week that only has 1 payout, but that's why it's significantly lower every once a month. This last payment also 8 cents. So it was bad. Not the best. Lower payout, but we're keeping that price up, which I really am a big fan of. I want it to come back all the way up to the near 20s. But is that going to happen? Only time will tell. It's at 1.15 billion, so it has climbed up even more, and it has a 67% dividend yield. We're almost to the full year of weekly payments, which is amazing, and the price is falling. Now, is it a good time to buy? Maybe. We're seeing it hit 13. It could fall a little bit more, but I do want it to go back up to that 14 area. I bought this thing all the way up here at near 17 is I think my average cost. So I'm a little bit in the hole, and I want that price to bounce back up, as I'm sure we all do. Last couple of distributions, we had 10.5 cents, which was a low one. Then we had 18.5 cents, we had 16.5 cents, and 14.5 cents. Not great, I will say. I do like YieldMax. I think it has a lot of potential, but I think it really has just taken a beating recently. I'm not sure if it's because everyone's investing into ULTY instead. Who knows? But let me know what you guys think. YieldMax versus ULTY. Which way is the way to retire on dividends, to get all that money on dividends? I'm curious what you guys think. And now we're going to jump into our weekly tracking spreadsheet. And you guys are going to find all the information you want, including what's paid out the most in dividends, has the least NAV erosion, and has the best overall return. Only 49 cents from YMAG. We had $1.25 with the last payment, so I'm not surprised we had a bit of a drop. With YMAX, we had 94 cents. With LFGY, we had 87 cents. A bit of a drop for LFGY. I hope it remains or bounces back up into the 90s. It's not the first time it's seen the 80s, so it's not the worst, but I do like some bigger payments. Now, I am going to say we're going to showcase this in our positions tab in just a moment, but I do have varying amounts invested in some of these because we don't have fractional shares on Moomoo. So what that means is for YMAG and YMAX, it's above like 110, 115 invested. For some like LFGY, I think it's in the $80 range, which is a bummer. I'm reaching out to Moomoo. I hope we can get some fractional shares on these and a dividend reinvestment because that would be absolutely amazing. But onward and upward, GPTY, we had 61 cents. SDTY, 41 cents, a bit higher than it has been paying. Can't complain about that. It's just still a little bit low for what I like to see. RDTY, 49 cents. QDTY, 54 cents. A monster dividend from QDTY and a really bad one, really lackluster from RDTY. Interesting to see. CHPY, my underrated pick, still paid out 78 cents. Cannot complain about that whatsoever. And ULTY, $1.77. Absolutely amazing. And now we're going to slide all the way over to the right and see the total amount invested. I'm going to use the scroll bar instead. Sorry, not amount invested, amount we made this week. We made $6.90. Was a lower week. Can't complain. I will mention I'm getting $6.90 every single week, roughly, from a $900 investment. I'm happy with that. I'm very happy with that. Long term, that's very solid. If NAV keeps up, that's very, very solid. And again, if you guys are interested in this spreadsheet, it's for sale, spencereinvest.com. It's even on sale right now. So what we're going to do, we're going to jump into the positions tab. We're going to look at our total return, our dividends, all of that good stuff. Here we have all 9 of our selected ETFs. All of this data, the number of shares, everything in yellow you input yourself. I did get a video request, people asking if I would make a how-to video with this and show you guys all the use cases, and I definitely will do that. It's in the works. It just takes a bit of time because I have so many different of these spreadsheets, like tracking for all my different YouTube challenges, and I want to showcase everything. So I'm going to work with the developer on it and make sure we get everything it can do so you guys know exactly what you might be purchasing. Sliding all the way over, all this data is auto-inputted, 52-week range, our market return. This is all what we're looking for right now. So total return. And remember, this is skewed. And this is the problem with this challenge, I would say. Maybe one of the problems is I bought YMAG and YMAX a lot longer time frame ago. So I bought it a year ago. And ULTY, I only bought a couple months ago. CHPY, I bought even only, 3-4 months ago. So that's the hard part. So some of these have been trading for longer. So they should be performing better, but they haven't, depending on how the market was when they were launched, all of that good stuff. But we are all in the green except for our one outlier, LFGY. So YMAG held it for a year. We're up 19.52%. Cannot complain. YMAX is below YMAG. This is the first time in a long time I have seen that. 17.44% for YMAX. Still solidly in the green for about a year of trading. LFGY, I think it was in March this one launched. Newer, but not super new now. Down 1.05%. GPTY has fallen 10.7%. SDTY has climbed a little bit, 3.3%. RDTY 13%, QDTY 29.46%. Now hear me out. I say this every video. I had an error with my initial purchases where SDTY, RDTY, and QDTY were supposed to be purchased at the same time, all near launch. The order worked for SDTY, it did not for RDTY and QDTY. And then I just forgot about it. So the problem is SDTY was purchased near the high of $50. RDTY and QDTY were purchased a few weeks later when they were significantly lower in the $30 range. So don't look at this and go, oh, I'm buying QDTY because it's the better 0DTE option. No, it's just my timing. I got lucky. It has made me money, but I don't want to mislead anybody. And now we have CHPY, the unsung hero, 17.8%. It is out trading YMAX despite only trading for like half the time. Very impressed. Last but not least, we have ULTY, 27.6%. It has pulled back in price. That has affected our total return. It was actually in the green on price for quite a while, but now we're seeing it fall ever so slightly. I'm not panicking. I'm A-okay with that. It's a pullback. It's what happens. And I'm going to make that full video on it to fully explain that. Now we're going to slide all the way over. I haven't inputted in dividend growth rate. I have not inputted, well, here's cost, basis, and market value. Very important. So we can see. YMAG, I invested $115. It's worth $96. It's still in the green, but our NAV has fallen. The same thing with YMAX, 110 to 85. Some of these are up, believe it or not. LFGY is not, $106 to 72. Ouch. Some of these are up though, like I said, mostly QDTY from 79 to 89. Very impressed with that. CHPY from from 103 to 107. So sometimes you play, you get lucky, and the prices actually bounce. You get some good returns on top of the income. Now, total dividends received. Now, remember, some of these are very, very new. The only reason I show this is because YMAG and YMAX are solid ETFs, but they pay out less. We've seen a lot more payouts from LFGY and from ULTY very, very quickly. The yields are just higher. I believe ULTY has the highest yield. It has already passed LFGY. I think it will pass YMAG and YMAX within the next couple of months here, which is going to be a crazy day. And this is why people love it so much. If we do see a bear market, I'm not sure what's going to happen. Could be really detrimental for a lot of these, and I will be documenting which ones remain the kings of weekly income. I appreciate you guys so much. Again, if you are interested in weekly dividends, in monthly dividends, don't forget to like and subscribe. If you're still here, you like this video. So check out these ones that I'm sure you're going to enjoy, including our 51 weekly dividend ETF full since inception review. Check that out. Let me know. Check out SpencerInvest.com for my weekly dividend cheat sheet that is completely free. And of course, I hope to see you in the next video.